At the start of the year, stock markets were near record levels. US tech share price to earnings were at levels last seen just before the dot-com bubble. EU investors were really excited at the prospect of tax cuts for the wealthy and more deregulation. But they also seem to have forgotten that Trump intends to upend global trade with what the Wall Street Journal is calling the dumbest trade war in history. In recent years, US companies have seen a surge in profits, though the average householder has not really felt this economic boom, with real wages growing much more slowly. In fact, consumer debt has risen as average households have struggled to keep up with high housing and interest rate costs. This suggests the US economy is unbalanced. Corporate America has done well, GDP is definitely outperforming Europe, but how sustainable and broad-based is US growth? And this is important because the US is really the main driver of the global economy at the moment. Now, in the post-war period, the United States was at the forefront of a rules-based international trade order. It saw a period of falling tariffs, and companies had faith that trade agreements would be honoured, and this encouraged cross-border investment, greater trade, and it enabled many people to become more prosperous. Certainly the Washington Consensus, free trade had its critics. Not everybody benefited as much, but it was a period of rising living standards and falling global poverty. But that all seems to have thrown up in the air, with Trump seemingly abandoning trade agreements, targeting closest neighbour, closest ally Canada with a tariff of 25%, which is really quite high. And the truth is that all the old uncertainties about trade and investment are been kind of questioned, and this is why markets can be spooked by this uncertainty. Now, a good question to ask is, why do some countries fail and why do some succeed? There's a huge disparity in GDP per capita. A key factor to long-term economic growth and prosperity is political stability, rule of law, and an environment where firms have confidence to invest. For decades, this was the United States. And from a perspective of GDP, the US economy has been tremendously successful. But markets are now starting to re-evaluate the United States. Does it have the same commitment to trade agreements, which were a key factor of a post-war stability? This is a really big change to the global economy. And don't forget the US stocks account for nearly 67% of the global total. Now, US debt is forecast to soar in the coming decades. Now, usually with all the wealth in America and the global demand for US bonds, this shouldn't be a problem at all. But if the US starts to become more unpredictable, if it starts to make more irrational decisions on tax, spending and tariffs, it could become an issue. Now, why are markets really concerned by the recent 25% tariffs on the US closest neighbours? Well, in 2024, Canada and Mexico supplied 55% of the auto parts used in the US car industry. Since 1995, the US imports of auto components rose 169%, and this enabled US industrial capacity in autos to rise 71%. In other words, imports are a key factor behind US manufacturing. US tariffs will hit their own integrated supply chains and harm company profitability, discourage investment. And then on top of that, US consumers will be paying higher prices in the form of tariffs, which is a kind of sales tax. The Tax Foundation finds that the recent tariffs on Mexico and Canada will raise household taxes in 2025 by $670. But this is before we start the effects of retaliation from Mexico and Canada, and also the widening of a trade dispute to Europe. Retaliation has already started to hit US exporters. Canadian stores have started to remove American imports such as liquor. Trade war can really raise tensions between countries, which is unfortunate. And tariffs on Canada and Mexico may just be the start. Trump has said he wants to extend tariffs to Europe because the US is running a trade deficit with Europe. And this is true. Germany has a very large current account surplus. In recent years, their surplus has risen to 7% of GDP. And from a Trump perspective, it seems that Germany is winning and the US is losing. But actually, the reality is very different. In recent years, it's been the German economy that has been struggling. Austerity, reliance on Russian gas, higher gas prices, declining competitiveness, very high savings, unwillingness to invest, that's all led to very low growth in Germany, and as a result their surplus has gone up. America grown quite highly. So it's a sign that actually a trade deficit is not necessarily a bad thing. And the key thing to understand is that the balance of payments is composed of two factors. When you have a trade deficit, you have a capital account surplus. In other words, America imports cars from Germany. But the money doesn't just stay there. Germans then buy US assets, maybe US bonds, or invest in building factories in the US. So it's like a flow of money. When you have a deficit on trade, you have a flow coming in on the capital account. America and US have had this going on for quite a few years. US buys Chinese goods, China then puts money back in. China's a bit more complex. I mean, if anything, China is a potential target for tariffs because they have some unfair practices like state subsidies. But anyway, let's leave that to the side for the moment. Certainly with regard to Germany, the trade deficit America has isn't necessarily a bad thing. In fact, it's a sign of a strong economy, strong consumer spending. And if you try to reduce the trade deficit, what may actually happen is that you get less US consumer spending and less capital flows coming into America. And just going back to Germany, the economy is very dependent on exports. Therefore, it will be highly damaged by any trade war. So this is another reason global markets are concerned about tariffs. Big exporters like China and Germany are already weak. They can't afford a trade war. Interestingly, Trump hinted that the UK may be spared European tariffs. He commented he's getting on well with Starmer, but also a revealing comment is he says we'll see whether we can balance our budget. And this is an indication he's confusing a budget deficit with balance of payment. It's not like balancing a household budget. As I said, there's these flows from the trade and capital flows balance each other out. The other question markets may be asking themselves soon, if not now, is US growth as strong as it appears? Certainly growth has been good, US companies doing well, but it does have vulnerabilities. An ageing population, rising consumer debt, high housing costs, actually similar to many other countries as well. Also, deportations in America could hit labour supply in certain areas like agriculture. Corporate America has been very profitable, but households struggling much more. And if there's some kind of shock like higher tariffs, higher prices, it could be a trigger that causes much lower economic growth. And the reason I keep talking about America is it's a big driver of global growth at the moment. And it's not just a trade war that threatens the global economy and stock markets. It was only last week, it seems longer ago, but last week Chinese company DeepSeek appeared out of nowhere to threaten the big US tech giants. The US stock boom, of course, largely fueled by rising tech values. Markets thinking that AI will be as transformative as the internet and microchip computers. So stock market value's gone up a lot. But when DeepSeek comes along and challenges their monopoly, they start to look much more overvalued. The tariff shock has even caused a revaluation of crypto values as investors look to move out of high-risk assets. Americans have invested a lot in crypto assets in recent years, but in this era of vulnerability and risk, there could be many swings in the fortunes of something like crypto. One sure sign investors are predicting more unpredictability is the boom in gold prices reaching record levels. Usually gold, of course, rises when there's uncertainty and turmoil. So it will be a very interesting year, but also potentially quite damaging for the most vulnerable in the economy, who will be most vulnerable to a global trade war and higher prices. For more detail on the trade war and why the impact will be high for consumers, this video goes into more detail, so it'll give you more of a picture on it. But thanks for watching and do subscribe. See you soon. Cheers. Bye.